Hello traders, this is the second part of how to read the chart pattern like a professional traders. As I was telling you before, we were waiting for this second shoulder to be formed right here. If you follow my cursor, this second shoulder is being formed now, is being completed now. So we have our inverted head and shoulder nicely here. And as you can see, the price is now at this level where we want to buy. And as I said to you, we buy and we do the projection from this. We measure the distance from this point where my cursor is up to the neckline, which is this horizontal red light here. And then we project that the distance from here to here, we project it here to the upside, okay, and it gets us nicely to 13580, okay. So we have from I did mine, I didn't start from the bottom here, I'm a bit conservative, so I start from this level here up to the red light here, and then I project the same thing to the upside here, which is 49 point to the upside. So right now we are in this trade now and we are looking and see what's going to happen. So we are in from this area here and we put our stop somewhere here. Normally the stop should be all the way here, but we don't want to take too much risk now because now is the time is going, okay, and the market will be quite soon, so we don't want to give away all our money, okay. So we are waiting for this to reach 13580, okay. So this is the inverted head and shoulder, how you can trade that. I'm just going to change my time frame to 60 so you can see exactly where is my target level. Because of my target level, as you can see on the 60-minute chart, is this green line here, which is exactly 13580, okay. If he approaches and he hesitate a bit, I'll go and take my profit, okay, because some people usually come out before everybody, but because I use conservative measurement, I think he should be able to touch this green line, which is my exit, okay. So as soon as the price reaches this level, I will close that trade and look for the next opportunity. I'll see the reaction of the price when it comes above this green light. So as I said, on this hourly chart you can't see the head and shoulder pattern, but on the 15-minute chart you can see it clearly here, this inverted head and shoulder. So you see this is one shoulder here, and this is the second shoulder here, and this is the head here, and this is the inverted head and shoulder, okay. So what you do, you measure the distance from here to the neckline, which is this horizontal red line here, okay, and then you project it from here to the upside, okay. And you do the other way around. If you have a head and shoulder itself, you do it the other way around, okay. And if you are not sure about this inverted head and shoulder pattern, you can go and read about it on the Google or whatever, and then you will know more about this chart pattern. And like I said, this is one of the intraday chart pattern that is working perfectly. And earlier on, we had the signal here, the A, B, C, D pattern, and we know that when we have this pattern, the A, B, CD, and when the CD is broken, we know that the distance from A to B will be exactly the distance from C right here to D. If you don't know this pattern, you can read about it on Google, the ABC chart pattern, or some people call it the 1, 2, 3 pattern. What they are saying 1, 2, 3 means this distance from here is 1, and this distance from here to here is 2, and this distance from here to here is 3, okay. So this is a continuation pattern because it's a downtrend. The trend is continuing. It pulled back a bit, you know, and you usually have here the stochastic overbought, okay, and then you sell here, and then you measure it all the way down here. So on the 15-minute chart, this chart pattern is very clear. And then as I was talking to you earlier on, the second shoulder is formed nicely here. So I know a lot of professional traders are in this trade right now because they always use this chart pattern very often. So they will be pushing the price till we reach that green line. I can show you that again on the hourly chart here, which is our target right here, okay. It gives us nicely 49 point pip. Okay, so as I'm telling you earlier on, the chart is number one indicator, and you can use the chart, okay, to know exactly what's going on, like the professional are doing. Also, they are looking at the chart pattern and they are following it. Okay, they are not looking at the indicator, they look only on the chart. Okay, from the beginning, that's how the people were trading in the past. Before the computer come into this world, they used chart pattern, and they were making a lot of profit in the past, because the chart pattern that are valid for intraday are quite reliable. And right now, if our signal fail, we just close our position here for a very small loss. Okay, but it's a very reliable chart pattern. But like I was telling you earlier on, also there are a lot of bad news regarding the euro right now because of Greece and Spain and Portugal. So it's possible that some people will try to sell in this zone also. So we are watching carefully what's going on. Okay, so it's a bit tricky day today, so we are trading very carefully now within this New York session. So hopefully it will work nicely for us. If it doesn't work, okay, we will look for another chart pattern another day. Okay, but as you can see, the A B C D pattern is right here, has been completed, finished. Now we have another pattern. Okay, the inverted head and shoulder, and this is how you do it all the time. And if you keep doing this all the time, you'll see a lot of pattern and you'll be rewarded. Like I said, there are some of the pattern they don't work in the intraday, they only work for the historical data, like daily chart, weekly chart. Okay, so try to understand which one you can use for the daily chart for high probability trade. Okay, so I hope this video also is useful to you. So till next time, enjoy yourself, and then be happy. Thank you.